Well, hello everyone. Welcome to Trading Price Patterns. It feels like forever since we have been together, but actually it's only been a week. I was in Anaheim. I know some of you that are in the call, you were at the Advanced Options Workshop in Anaheim where Ben Watson and Joe Mazzola and Kevin Hinks and a cast of others spent 2 days pouring into all of you. And yeah, your ears were probably bleeding by the end of it, but it was a great event and wonderful to meet so many clients who are committed to changing their financial destinies by attending an event like that, or increasing their knowledge base so that they can make more informed decisions with respect to their trading. Today, we're talking trading price patterns, so we're looking at charts, we're making decisions based on that. Today is brought to you by the numbers 5, 6, and 7, because we're going to look at 5 positions we currently have on that need some management. We're going to look at 7 positions that we've gotten out of. I'm going to go through the math on one. They were all short put verticals that have hit our targets in the last week. So we're going to do a super quick review there. And then we have 6 new stocks that we want to look at. So we have got a huge amount of stuff that we want to do today. We have got the fantastic Mr. James Boyd with us, riding shotgun in the chat. So if you aren't following his classes, you are missing out, my friends. So you'll want to be sure you do that. Follow us on X if you're not doing that already. James is a prodigious poster, posts lots of great content, as do I. So consider this your formal invitation at Barbara Armstrong CS and at James Boyd CS. So just before we get into our 5, 6, and 7, know that a lot of what we talk about in this class, we have a lot of options trades on. We do have some stock positions we're going to look at today as well. Know that options carry a high level of risk and aren't suitable for all investors. Also know that we use the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn, to hone your skills, to practice, to make sure you're familiar with the platform, and to make sure that you understand a strategy and have a trading plan for it, and you've practiced it before you consider trading in your live account. One of the nuances or differences between Paper Money and a live account is that short options will never be assigned early in Paper Money. That can happen in a live account. And so although we don't get to see it in Paper Money, we do discuss it. Okay. So that's just a heads up on that. Let's get right out to the platform. And I don't spend as much time as I used to talking about the indexes, because at the market open today, it was Kevin Horner and Brett Moores. They do such a great job. You can go back and watch the archives on that. But, after coming down over 20%, we have come a long way back, baby, and, continuing to the upside. So, now we're not so far. If you had a good arm, you could probably throw and hit that all-time high that we hit back on February 19th. But, the bulls appear to be back in control, at least, this week. And, more of the same from the NASDAQ, right? And some might say, and we were talking about trend reversal patterns yesterday, and some might say, this looks a bit like an inverted head and shoulders, maybe not, a perfectly laid out, but, we came up to here and then we broke out and we kept on running since. So, and typical when we have a breakout, not uncommon at all for it to come back, into that neighborhood of the old resistance and tested as a new support. But yeah, so the bulls are back in town on the NASDAQ as well. And then if we look at our small caps, we don't trade a lot of small caps, but so why do we look at the small caps? Well, we're looking to it's kind of a canary in the coal mine. And we had, a lot of diagonal resistance breakouts in the last month or so. And now you might say, well, that's so 3 weeks ago. Again, we're seeing this inverted head and shoulder pattern setting up here, but it hasn't quite broken out yet. it's looking like this 2113-ish area is still acting as an area of resistance. So stay tuned on that one. And then when we look at the Dow, it's similar looking charts all around, right? And then if we come and look at our volatility index, back to 17.5. And, I've got to confess, I wasn't sure we would see that anytime soon. And so, that's a sign of confidence in the market. I get asked a lot where I find trade setups, and sometimes it's just stocks that are on my list or on my mind that I look at. And today I started going through the NASDAQ. I didn't get much past the H's, I don't think. To look for new opportunities. But if we want to come, because we haven't done this in my class in the last couple of weeks, if we take a look at our sectors, what's interesting is, at least it's interesting to me, in the last month, who's back at the top of the heap? Technology, consumer discretionary, industrials, and then communications. So it's like, so we're back to where we were kind of around the beginning of the year. And, in the last 3 months, again, we've got technology and communication services, utilities kind of starting to rotate out of favor, because when we go back to the 4 weeks, we've got utilities now, slipping, into the bottom half. All right. Is that an inverted hammer on the VIX? It's not really. Yeah, you could call it an inverted hammer. We're close to this support level here. So it'll be interesting to see if it drops further. We're back, like when we, kind of go back to this 1 year, we're kind of back in the range where we have spent most of the last year. In between that kind of a low here of 12 to 13, kind of between that 12 or 13 and 22 range. And after having spent, several weeks well above that, a lot of people are feeling like they can kind of catch their breath again. Okay, so let's go to some of our current positions. And I don't know what your routines are, but my routine includes reviewing my current positions, and depends on how short a term a trade it is. But when we come to the monitor tab, I kind of review what I currently have, and then move forward. So if we look at Mickey D's, it's pulling back a little bit. It actually, when I first looked at it today, it was down significantly more, and we were up over 80%. But this expires in 2 days, and this was part of an iron condor that we had done. And so it was actually falling really dramatically when I first looked at it. But when it went up to here, and was pushing on our short call vertical, we bought back the short put vertical. And we said, let's just be patient. So I should have just exited when I saw it first thing this morning when it was down a little further. But we're going to exit that second piece, leg out of the second piece of our iron condor. So we're going to close that. And that's our iron condor. We're now done with that one. Okay, the other one that we have, but it, is something we don't trade often. It's certainly not as often as we trade, our long and short verticals. We bought a put on SMCI, and we don't do this on a lot of stocks because, one, it ties up some cash, and two, it means the stock could be put to us. So we're generally looking for candidates that cost $50 or less. But we sold a put on SMCI. We have an order in to buy it back when we have 80% of our max gain, but we're up 60% on that. And we're up a bit today. Now, if this is a doji kind of candle, we might just want to take our 60% and close it out. So let's come in a little tighter. So when we look at this, we sold it here at 37 and it's continuing to move up. And we have a bit of a doji, so we'll look at this again, but we're just going to kind of let this continue to percolate, so to speak. Okay, so that's a trade number 2 that we're in. Then I want to come and look at I want to look at Celsius Holdings. So Celsius Holdings, we did a buy right on this, and we sold a protective put because earnings was coming up. And the net on that, we were ahead by the time we closed everything out after earnings. On this date, we closed it out. We were up by just over $100, $110. Then we sold another covered call, and we said, well, it's kind of bouncing off a support level. Let's sell another covered call when it gets a little higher, up near a resistance level. And we saw this as being a resistance level. We had this doji candle. So we sold another covered call and we bought it back here. So today it's up again near this high. And so could we sell another covered call? The last one was expired June 6th, and maybe, come out 30 days. So if we look at, we could sell the 42, just go out 16 days, and we get a $1.20 to a $1.23. If we come out a little further, how much more do we get? If we came out to July 3rd, say, and we've got a reasonable amount of volume here, so we're good there. We've got a 6-cent bid-ask spread. We get $1.82 to $1.88. So this is the trade-off that a trader might be going through in their head. They might say, you know what? If I can get this $1.20 and I'm not called out, then maybe I could sell another one for $1.20. And if I'm called out, I've made a decent profit on this and I'm okay. And this is only 2 weeks and we're getting $1.20 versus another 60 cents, to go out almost twice as far. And so we're going to just try this doing, this short-term expiration. And that's kind of going to be my theme for today, is looking at shorter-term expirations and thinking, this could continue and go right up through our strike and we could be called out. And if that happens, we're okay with that. Okay. Okay, so we're going to sell a single because we have 100 shares on Celsius, and when we hit confirm and send, we are going to put this in our buy right covered call bucket. Okay. So that's on our monitor tab. Now, Rivian, man, I could have thrown my shoulder out for patting myself on the back, because when we bought this, it immediately went up. We bought the first call back. We made a whopping 13 cents a share, or like on 300 shares, almost $40, not counting commissions. We're now down $450 on this. So let's go out and look at Rivian. So we had sold a covered call. We bought it back. And it turns out we could have not bought it back. So we bought it here, and then look at it, went way up, and now it's come down. And yesterday we had this Harami pattern, and it looks like it's not following through. So would we rather sell a covered call now, or perhaps when it bounces? So we'll look at this again Friday. But we're going to say, hey, well, I don't know why we didn't have a stop on that. Shame on us. We've got to define our risk. So we probably took it off when we sold that covered call. But here's our low of 1385. And we are going to go 2% below that to 1357. And we're going to come in here and put a stop in on these 300 shares. At 13.57. But the plan is for this support level to hold and for it to go up the next couple of days, whereupon we could sell a covered call maybe when we meet again on Friday. And I do treat this as a companion class to the Trading a Smaller Account on Mondays and Fridays. So, but you know what? Like, you have to, in the cold light of day, go, oops, this isn't going the way we expected. And when do we stop the bleeding? And you have to treat this like a business if you want it to pay you like a business. And so sometimes, you know, it's like sometimes you hire someone for a business and they don't work out. They start, you know, not showing up for shifts. And you just have to say, you know, this was a hire. This person is not a good fit for our company. And, you know, Rivian may turn out not to be a good fit right now. So, you know, it's on probation. Let's put it that way. It's on probation. So Meta, we bought some shares of stock and we had this conversation around, well, we could do a long call vertical if we were bullish, or a short put vertical, or we could just buy shares. Well, it's almost $700 a share right now. You know, back when we first did this, it was 586. And so we put a target in based, I think, on the Fibonacci's, and then it came up and it formed this pattern, you know, tombstone doji, you may want to call it, or a hanging man that said, hey, this run might be over. And so what we did is we took and we moved our stop up, I think, to 1% below the low of this day. And said, because we were getting close to our target, I think our target was around 686 or something at the time. And so we ended up out with a pretty nice profit on that. And then we bought another, 8 shares or 6 shares, whatever it is. And it's, we're still in that. But here's our stop on it. It's at 573. And it's like, do we really want to risk putting ourselves in that big a losing position? And so I kind of came to this candle here and said, okay, our low was 622.65. We're going to go 2% below that. And we're going to move this stop up to 610.19. So we're going to move this up to 610.19. So it's still giving it a lot of latitude, but, you know, the stock is still moving strongly. So we don't necessarily yet want to do this, you know, put an exit 1%, you know, below the low of that day, or a buck below, or whatever we chose to do. Now we've got another trade that we put on. So we bought shares of stock. We also did a long call vertical. And so we placed that long call vertical. And this is the one that I will go through the math on. But we've moved this up on our chart. We haven't actually moved the stop up on Meta. So we have 8 shares. We're up $356. Now, remember, you know, $356 is not nothing. Like, that's 1.5%, or it's more than 1.5% of our total account value. Because, you know, like, let's say we're at 25,000. So if I take 356 divided by 25,000, oops. I wonder if I have a backspace on that. Okay, dang it. See, I'm a little calculator impaired at 25,000. You know, that's 1.4%. You know, so it's not nothing. We're up 7% on that. So what we're going to do is we're going to come to our sell order on Meta, and we're going to move this up. So we're going to cancel and replace this, and we're moving it up to 610. And so from 573 to 610, we're just trying to eliminate some of our risk, right? and by tightening things up. Now, there's no guarantee that if the stock were to gap down, we might not get out at something lower than 610.19, but we're just trying to eliminate some of the risk. Okay, so we've adjusted that stop on Meta. And then Meta is one of the stocks that hit a target today. And we can see that, you know, it was a short put vertical. We got out for 24 cents. So if we come to our account statement and we look at Meta, we put this trade on when we met last week, okay? And we got $1.20 for it when we sold it. We bought it back today for 24 cents. So, and what's 24 cents? It's 80%. It's a sign that we got 80% of our max gain. And so when we look at that, we were up by 94 cents a share, or $94 in total. What were we risking? Well, we were risking $5 minus the $1.20. So we were risking $3.80. So if we want to calculate our return on risk, we take our 94 and divide that by our 380. Oops. 94 divided by 3. Oh, sorry, this was 96. So 96. I appear to be math challenged also. So 96 divided by 380. That's 25%. So that was a 25% return on our risk. And that is relatively typical. It's within that ballpark. We tend to see typically something when these go well between, say, 18 and 35%. Unless volatility is pretty high, then we might see it a little bit higher than that. But that's kind of that realm of expectation when we are looking at a short put vertical. And so, you know, that one went well. It was a base hit, and, you know, we lived to trade another day. Now, there were a lot of other short put verticals that hit their targets as well. I'm not going to go through the math on all of those, but if you'd like to practice that, I encourage you to do so. So just to quickly blow through them, because, you know, when I was at the live event on the weekend, somebody said, we have a lot of short verticals on. Are you going to review those? It's like, yes. So here we are. We placed a short put vertical here when we had this inverted hammer, that we felt would bounce off support. We talked about this being a more aggressive entry because we didn't wait for the confirmation. We got out of that one yesterday, and, you know, it hit our target. So that was Microsoft. We also did one on Palantir. And so again, green means we got in, and the gold is we took a little cheddar. You know, we made a little cheddar, it hit our target, and we exited. And the nice thing about this is it went up, hit our target. If we were looking at this now, we'd probably have less profit, right? Right. Meta, we've already looked at. Okay, coin. We did one on coin. And so, you know, coin, we put it in on this day. It went up nicely, then came back to kind of taunt us, bounced right off this support level. So it came down, kissed it here, kissed it again. This expires this Friday. And so, you know, thank you to Time Decay. Thank you for helping us chip away at the value of this option. So it hit our target yesterday, kind of better late than never. Carvana was another one, you know, so we placed the trade here, and here we did wait for the confirmation. You know, we had this inside day at support. It was kind of hugging this support level for, you know, over a week. We got in on this day. It hit our target here. This one was set to expire a week from Friday, and Carvana hitting a new high today. Visa was another one. So, just in case you're wondering what happened to all those short put verticals, here they are. We got in on this day. We were in this one for, quite a while, and we got out of this one last Friday when I was in Anaheim, and that one hit our target as well. Now, the last one I want to bring up is Boeing, because Boeing, I don't know where my exit on this one went. And first thing this morning, we were up over 80%. And then I noticed it's like, well, why are we up 80%? We have 80% of our max gain and we're still in this trade. So I went ahead and put in an exit and we got out. But, had we been looking at this now, we had 80% of our max gain. We ended up out with 70 some percent, but we're out. So that's that one. And sometimes, due to human error, like I may have been having trouble with the system that day, hitting first trigger sequence, because I checked and it didn't look like I just forgot. But it's easy to forget and change your expires at the end of the day till good till cancel. And then, and this is why trade management and treating your trading like a business is important, because if you come down to your short put verticals and you see something that doesn't have these little chiclets, it doesn't have an exit. So my first question to myself is, oh, did it hit a target? So is it up here? Yes. Yes and yes. So I'm good to go. But if there was still an active position and I don't have an exit, then I have work to do. Right? Right. Just repeat after me. And so, my friends, we have already gone through the 5 and the 7. So does it feel like we've gone through over a dozen trades? Well, we have. Okay, so now let's start looking at some new things. And I want to come and run with the crowd at CrowdStrike. So CrowdStrike came with earnings yesterday, and they gapped down this morning. But and it's interesting because it opened here. So opened here, ran down to here, and then it came all the way back up here and is now trading here. And I guess what is encouraging to me about this candle is that if we look at this as a previous support level, it went below that, but this is where it opened. And it's now above that. And so I look at this and think, are some traders maybe looking at this as a buying opportunity? And so, I know that there has been some volatility crush on this, but could we maybe come down and sell? I wonder, could we sell the 450? Which would be, around here if we think that this support level is going to hold. And, and this may be, a more aggressive entry, but let's just see, if we could get enough. And could we come out just for a couple of weeks? Now, if we come out for just a couple of weeks, it doesn't give us much time to recover, but the time decay will be interesting, won't it? So if we look at this 450, we've got a 40-cent bid-ask spread on a $9 option. We've got lots of volume on the stock, lots of volume on these contracts. And could we sell the 450? We get 85 cents for a 250 wide spread. And if we went 450, 445, we get $1.67. And so, Thea saying, can you hit us with time decay the way James does it? And it's funny because James and I were talking yesterday, and I said, one of the things that I love about riding shotgun with James is he just makes it entertaining. It's not time decay, it's time decay. Yeah. So if we could get $1.70, what are we risking? 330, 170 divided by 330. That smells like about 50%. Now that's 51% for a trade we'd be in for how long? A max of 16 days. And so if we're saying, you know what, I'm okay with that. We're only going to do one contract because we still don't want to risk more than $500. we're going to put in first trigger sequence. We're going to right click, create an opposite order, and say we want it back. We want to buy it back when it's worth 32 cents. Now, if the trade goes against us, when do we bail? Okay. So if let's say tomorrow this falls below this support level, below the 30-day moving average, and then keeps on moving, we might say, you know what, this isn't going according to plan. I thought this support level here at 454 was going to hold, and it's not. Okay. So that's what we're going to do with that one. Let's come and look at Charter now. So new trades, partially sponsored by the letter C, at least for the first two trades. So here's Charter. Now, we had earnings quite a while ago, and it looked like there was a pretty positive response to that because it started running. And, you know, if we back the truck up a little bit, we can see that we had this pretty significant resistance level. And post earnings, it kind of came up, challenged it, backed up, you know, retested for one whole day and then took off. And it's come back down to this support level again. So, and, you know, when we zone in, it's like it spent, you know, 3 days here. And today we had this doji pattern. Of course, it's a teensy bit raining on my parade in that when we have a hammer pattern, we want to have the next day the stock to close above the body of this candle. And right now it's doing that. But we have a bit of an inverted hammer or a spinning top or, you know, whatever you'd like to call it, another candle of indecision. But it is technically, if it were to close right now, it would be above yesterday's candle. So could we come down to around this 385? And what's the advantage of doing this as opposed to waiting for it to bounce more aggressively is that we're going to get a richer premium. And could we come out and do something again, just short term? And 16 days, I mean, typically, you know, we're going to, you know, look at that time frame of 20 to 50 days. But we've got lots of volume on these June 20th, or at least on some stocks. So could we look at this 385? And here it makes a liar of me, you know, because we had the $10 wide strikes available longer. So you see more volume here. But could we do the 385 and the 380? And, you know, here we have a 40-cent bid-ask spread. So, you know, that's acceptable. So if we get $1.75, if we sold this strike here, and how much are we risking? 325. Well, gee, that sounds like 50%, 54% actually. So if you're saying, yeah, that's a pretty nice return potentially. Now, what's the downside? Well, the downside is that if it comes back below this 385 that we believe from our technical analysis will hold, we have very little time to recover. What do they say? Fortune, you know, favors the bold. They also say a fool and his money are soon parted. So, you know, which quote? It's like, Fortune, I'm going with fortune favors the bold. How about we go with that? Yeah. And how many contracts are we doing? One. Why? Because we're risking over 300. And 300 is fine, but we don't want to risk 660. Hence, one contract. Now, if you had, you know, a larger paper money account, you know, you might be willing to risk 5,000 on one single trade, you know, so you do 10 or 12. Okay, so that's Charter. Now we're alphabetically moving to the ends. Okay, so we're going to look at NVIDIA, a little stock, you know, gets a lot of chitter chatter, does NVIDIA. Like, if you had to say what was the most anticipated um, company that we wanted to hear from during earnings season, there are some that might argue that it was NVIDIA. Year to date, only up 2.5%. So, it's been a long time kind of going downhill earlier this year. But then we had this diagonal resistance breakout, pulled back, moving to the upside. So kind of going along with our theme here, our short put vertical theme today, kind of could we look at this 135 area? And again, like we are 30 cents away from this being a green candle, which is what it was when I looked at it this morning. So, could we look at that 135 area? And again, this might be the last one. So we could look at June 20th, and this one is so heavily traded. Look at the weeklies. We have a lot of liquidity, 2-cent bid-ask spread on the 135, and dollar-wide strikes. So, if we look at this for the 16th, we've got 44,000 contracts. I mean, that's insane. So we get 44 cents. So, that's about a 30% return. My Spidey sense is telling me 44 divided by 156, if we're risking $2, about 28%. Well, what if we went out another week, which is what we typically go out at least 20 days. So if we went out 23 days, how much more would we get? 52. It's interesting, right? Like you get 12 cents more, but you're going out, no, you're getting 8 cents more, and you're going out 50% further. So from 2 weeks to 3 weeks. It's like, you know what? Let's stick with June 20th. So, and this is a shorter time frame than typical, and let's just see how these play out. We'll just see how they play out. And, how many of these contracts can we do? Well, if we're risking about, $1.50 per share or 150 a contract, we could do 3. And then, we're risking 465. So we're going to put in our exit, 9 cents. Whoops, I don't want to analyze it. I'm back. I want to create an opposite order. Good deal canceled. Confirm and send. Fire in the hole. And, only 16 days to expiration. Oops. I can type. Honest, I can. Only 16 days to expiration. Okay. Okay, so that's NVIDIA. How about spot? Well, let's look at a stock that you guys probably don't often look at, Nutanix. So it's in the tech sector. We had this big kind of double bottom pattern set up. And why did I kind of crop off, this top here? Why didn't I make it at this top? Well, because, and this is where technical analysis becomes a bit of an art, right? Like, where do you draw your lines? And the reason I drew my line here is because this is where our support, our horizontal resistance level had been. And then it broke through and came back to retest, instilling some confidence. And then it's like, yeah, you thought it was a breakout, fake out. And it came all the way back down to this bottom. And then it came back and hit this again. And then came back down and actually blew through the bottom. And then, came back up. And now it's kind of retesting this level around this 74. So could we maybe sell a short vertical around this 74 mark? And so let's look at that. And what do the options even look like on this stock? And so we have only monthly options. So that's often not a great sign, but like, look at the volume on these, like thousands hundreds or thousands of contracts, like even out to July. And so if we wanted to do something shorter term, we'd want to be, say, around the 74, maybe 75. Our low was 74.50. If we did the 75, we've got almost 3,000 contracts. We'd get 60 cents on a 250 wide spread. So that's 60 divided by 190. So that's 31%. So, that meets our parameters, but you might say, well, I just want to see where that 75 is. Let's just turn this into 75. Am I comfortable with that being my short strike? Because the goal is for the stock to stay above that strike. So if we say, oh, we're okay with that, then we're going to do the same thing we did with the others. And so this is our short duration day. Because we've now done 4 trades and, we've, all of them have had an expiration date shorter than what we would normally do, because the premiums seem to be there to support it. And if we're risking $1.90, how many could we do? We could do 2. So we're risking 380 for the potential to make 120. That's fairly typical with our short put verticals. Okay, so there's a couple that we didn't get to. Not shocking given we wanted to review, 15 trades or something like that, but Netflix we didn't get to. So we'll look at that one maybe on Friday. And Spotify was another one that seemed to be breaking out today. And so might there be an opportunity there to place, a practice trade? But we did a lot. We placed 4 new trades today. And so these are the ones to open. So we sold a call on Celsius Holdings. We own the stock. We did a short put vertical on Nutanix, on NVIDIA, on Charter, and on CrowdStrike. All of them expire on the 20th. And so, we're talking short duration, and we'll have a conversation when we get out of these and see how that went. All right. So, and then we did a lot of trade management, to the tune of about a dozen stocks. We both reviewed or we made decisions on positions that were or had been in our account. So we packed a lot into today. I hope that you found it helpful. Here's my ask of you as we wrap things up. First, if you'd hit the like button, it helps move this up in the algorithm so that more people can find this content. 2, there's a survey in the chat. James just posted it. There's 2 questions. 1, I hated it. 10, I loved it. And then there's everything in between. So whether you're in the love it category or something else, just if you want to put a comment in and say, hey, you haven't talked about this in a while, or you go too fast, or you go too slow, or you haven't talked about this strategy, I'd love to see you cover this or this concept. I promise whatever comments you type in, both myself and the management team will read each and every one. So you've got a voice. If you're watching this in the archives, you can just type your question or your feedback in the comment section. I do look at those on the daily as well. So do the survey, hit the subscribe button if you haven't already subscribed to this channel. And then don't forget to follow James and I in the land of X, James Boyd CS and Barb Armstrong CS. And last but not least, I didn't get to it yesterday, but I'm going to post on X after this webcast something that says, would you like me to follow you? Because I'm going to limit the ability to respond to my Twitter posts or X posts to those who I follow. because we're getting Mr. Spam-A-Lot is showing up on the on the daily, right, James? And we're getting tired of having to block and report and whatever. So yeah, so Beach Life was in Anaheim. It was great to meet you as well. I know that there are others that are on this call that were there as well. And coming up, we've got a market drive coming up in Miami and one in New York. Kevin Horner will be in Miami with Ben Watson, and I will be joining him in New York along with a cast of others. So I hope you'll consider joining us for those events. They're absolutely fantastic. Take care, everyone. Have an awesome day. Lots of great content still to come today, so stay tuned. Bye for now.